Welcome everyone to this special roundtable discussion inspired by Grant Thornton's report, 6 Ways Your Business Can Fail. I'm Ian Pascoe, the CEO and Managing Partner of Grant Thornton here in Thailand, and I'm thrilled to be joined by an exceptional panel of expert colleagues today. Each brings a wealth of knowledge and experience in their respective fields. Ashish Chaturvedi is a director of our forensic advisory, and he's here to discuss internal fraud and internal controls. Andrew McBean is a partner in our advisory services technology service practice to share insights on how companies can stay ahead in today's fast-changing digital landscape. Ratna Wright is a partner in our business consulting, and she's here to explore strategies for attracting and retaining the very best top talent. Tanva Mahitivanichcha is a partner in our tax and legal, and he's here to guide us through the complexities of tax compliance in emerging markets. Today we're tackling some of the most pressing challenges businesses face and the strategies to overcome them, from fraud prevention, digital transformation, talent management and tax. These are not just threats, they're opportunities to build resilience and drive growth. Let's dive into the conversation. Ashish, let's start with you. Internal fraud is often very underestimated by companies.
Yeah.
Can you explain why this threat is so underestimated by companies?
That's a very good one, Ian. I think first of all is the lack of understanding of the issues. There are times when, during an internal audit or during an internal, controlled issue, what would happen is there was a very small issue which will be brought to the table, but then they do not understand that this can become big. And they would, then give some mitigating procedures, which is not understanding the scale and severity of that problem. The other reasons why these underestimation is done is, frankly, about the lack of capabilities as well. Because generally you can understand that in an organization, and especially in a geography like Thailand, we have either an internal audit or a compliance and legal combined together looking after the issue of frauds. Now, frankly, if you look at conceptually, if you look at the fraud management framework, it should not be the responsibility of either an external auditor or an internal auditor. Mm-hmm. The function should separately be handled by an ethics or a compliance team, not combined with legal. That's just the second. And I think the third one, which is the biggest one, is also lack of any provisions for doing any investigation. Because everyone thinks in this world that, I will not have a massive scale fraud going on in my organization. So they live in this cognitive bias, and they don't realize that this can go wrong, and I need to have budget allocated for doing, for something to go wrong. So that is, having no budgets at all also leads to underestimation of any issues of fraud.
Everyone always thinks, won't happen to me. But how prevalent really is fraud in organizations?
It is there in majority of the organization, and it depends to the tune at which it is. It depends on the industry that the company is in. It depends on the process it follows. It depends the culture of the organization. So there are a mix of combination of reasons which leads to having fraudulent activities in any particular organization per se. And most of the times it is, again, that cognitive bias leads to not recognizing and realizing that yes, this is going on in the organization, and they would treat it as BAU, business as usual, most of the times.
Because people think, I've got an auditor, I've got an internal auditor, they're going to find if there's any problems.
Yeah.
Okay. Are there warning signs?
There are many. Actually, if you speak about, again, it depends on the company largely, but then if you have to talk about which process or which functions of the organization that you are speaking about. On a very broad level, if you say P2P, procurement to pay, right? There can be various warning signals, right from favoritism, and you can just check it by the share of business that a particular vendor has. You can take out top 10 suppliers of that organization. Then you can really go when we do a particular risk assessment or a fraud risk assessment of a P2P cycle, we do check that, okay, every time this winning vendor is bidding, who are the other competitors? If company A is always bidding the contract, but the competes are B and C, I mean, it's very logical to think why, Are these B and C companies in the similar trade, or they just are there every time going for the bidding just to lose? No one would do that, right? Even a vendor like B and C would correct the course of action, think about their strategy of participating in a bid. But then there are many warning signs in any cycle per se. If you talk about O2C, which is order to cash, people don't realize that not just from outside, the frauds are largely penetrated through inside because of the incentive links or KPI links, parameters which are designed. So, for example, we were doing a forensic review for a pharma company, and they had this incentive linked to the sales. But sales will only happen once you kind of send the sale invoice, not the consignment invoice. So, but the process was that you have to give a consignment invoice first, right? So, the system, the internal auditors and the reviewers completely missed the trail where the sales representative was just doing the sales invoice, getting the incentive and canceling it in the next quarter. So there are many signs like this. And even in if you're ignoring the voices, the noises around the system through whistleblowing or speaker programs, then also it indicates that there is something going on and people are not ready to speak up and tell what's going on in the organization. And so basically even soft risk assessment procedures or assessment procedures of these whistleblower programs can also tell you a lot, not just I would say through and through procedures on P2P or O2C.
Talking to a client the other day, and he said to me, I've got a really good SAP system. I don't have any cash in my business. Everything I do by direct transfer through, and I approve all transactions through my mobile phone with OTP, one-time pins and everything. So I couldn't possibly have any sort of fraud in my organisation. What would you say to him?
So it's largely, let's hope that your friend is right.
Invariably not.
Yeah. So I think if he's talking about the system which is just before the payment, I believe he hasn't looked enough. He should do an assessment with respect to the process which is followed by each of these functions before the payment is being processed. And second, the quantum and scale at which the perpetrators from outside operate these days with regards to cyber or digital frauds. Perpetrator generally sits roughly about 225 days in one's computer machine before it actually initiates any action, kind of imitates that person who's authorizing the payment or make this payment. And then from that point itself, even you have all the processes going right for you, if you don't have your cyber defense in line, then also it can lead to a large amount of losses to the company.
Well, I'll tell him he's not often right and he's wrong again. There you go. Switching gears to internal controls. Why are they so critical for maintaining organisational trust and integrity?
Yeah. I think internal controls, again, should not be considered the only tool to fight the fraud. That's first, I would say. Okay. Uh-huh. But then when you design an internal control, it should be designed in spirit. And when you say in spirit, that means you should consider the vision and mission of the company, what is there, right? The second thing would be, when you are designing the internal controls, you're thinking about first, not just mitigating risks, but also identifying them. So you identify them first and then mitigate them. You not just fight the frauds, but you also identify errors as we go along into the process, because all the things which you're seeing as a result or an outcome of an internal control assessment product is not a fraud. It could be a mistake. So you're identifying those mistakes, and then you're bringing a lot of accuracy into the system. So when you combine all these things, these internal control assessments would lead to efficiency as well as a trust in the system, because everyone is going and seeing the results that yes, we missed this step, or we eliminated this step, and this has led to a particular gap in the process, or could have led to a loss in that particular process. It could be related to operational efficiency. It could be related to financial performance of the company.
You mentioned culture before, the importance of culture within the organisation. How does that culture, and perhaps coming to Ratna earlier than she thought I was going to come to it, how does culture fit with setting out a good framework to ensure that the business is not at risk?
Culture is very important. Culture is the most important thing before you set up any principles or any practices in an organization. I'll tell you an example, and basically this arises because of the way the employee thinks what the culture in an organization is, whereas what the management thinks and perceives that this is the integrity culture which my employees follows. And there's a lot of difference. We have done certain surveys, we have done certain questionnaires with clients and their organization. We have just distributed a list of questions to them and then realize what kind of answers were really coming in from those employees. They didn't even know whether a particular behavior is correct or not. They knew that something is not right, and they were not reporting it just because they thought, okay, not just person A is doing it, person C is also doing it, so might as well I'll also start doing it, right? And then they don't even know. Even someone knows, okay, of the behaviors, but they don't want to report, because not just of the fear, but also because they don't know whether there is a mechanism which works. That's one. Second is they don't know who to report, and they don't have trust in the system that if I report, an action would be taken and the corrective measure would be brought into the place. So the culture part is very important. Culture can spoil the whole vision and mission of any company, and then can bring down the company. It will lead to not just financial losses, but also reputational losses once the news comes out on the surface.
So you also mentioned whistleblowing programs and the integrity of a whistleblowing program inbuilt. So that's got to give people, I guess, have in an organisation the culture of being able to speak out and having the confidence to speak out, or should it be not speaking out privately, if you like, confidentially?
I think it should give the whistleblowers all the channels of communication, and if they want that, they should disclose the matters in confidence and in confidentiality. I think they have the right, and that's the way it should be. And that is the reason, Ian, why most of the people are not very confident when they are disclosing to an insider that, one, the news will spread out, and what would be the repercussion, that I'll be seen as a troublemaker or a crybaby, or what would the person against whom I'm raising my voice would retaliate against me, right? So it has to be internal, and yes, it has to be external, and then yes, you have to make sure that the confidentiality is maintained. The name of the whistleblower is not out, is not mentioned anywhere, is not disclosed to the entire world, and also the other matters which they should need to take care is the actions are done in a manner which does not raise points or point fingers at the person who's reporting. Yeah.
Well, do you have any practical examples that you could share with us of how strong internal controls, independence reviews, compliance audits have really helped a company avoid significant risks in this area?
Yeah, so So recently there was one company in news. It had a acquisition in Thailand back in 2019 or 2018 sometime, and the way they were doing business was obviously not in compliance with the anti-bribery, anti-corruption clauses. They were dealing with the government authorities when it comes to construction of roads, bridges, rail networks, etc., etc. And they were since these entities, these government entities were their clients. The moment the government opens up a tender, they would take these people to their plants outside of Thailand with their spouses, give them fancy trips, and when they come back, even then there were all sort of entertainments going on for them. This matter came to light, and then there were auditors and there were reviewers who reported this issue, and then there was a heavy penalty from the SEC in the US. Vis-a-vis a company which is comes from a very regulated industry, liquor, and it goes through all sort of licenses within Thailand as well. And they were selling it to the government and certain institutions of the government. They had a very strong, very strong, culture within the organization. But one of the salesperson, just out of greed, said, "Okay, I want to sell to this, to this entity, and I would meet my numbers." And he kind of said that we have to do certain things for these government entities. And there was one whistleblower who came up and he said, "You can't," as in reported to the program, to the hotline. And then they brought in and they scrutinized everything, and that saved the liquor company from millions and dollars of penalties. Wow. So this is in a good manner, and you can see both the companies were, one company had already followed that path and they paid penalty. The other company, there was, the culture was right. People were allowed to speak and report something which is not correct, and that's how they identified it, detected it pretty early, and then they avoided so many penalties.
So few organisations should follow that example.
Absolutely.
Over to you, Andrew. Companies often fall into the trap of thinking, if it isn't broken, don't fix it. How dangerous is that sort of school of thought in this very fast-moving technological world?
Yeah, I mean, I think you just answered the question, actually. I mean, thank you. Next question.
Okay.
It is it's such an obvious statement, and I present this a lot, and when I present, people nod and say yes, that's exactly what's happening. But it's kind of interesting how we don't do much about it, which is the longer we leave a process, the longer it becomes sort of fused, if you like. Actually, particularly, it's often fused with a person, which is very troubling, because even if you want to change the process at that time when it's become very fused with a person, it actually looks like you're trying to change the person. You're not actually trying to do that. You really are genuinely not. But when you're trying to fix the process, it looks like you're trying to change the person. And then, of course, what you get is sort of maximum resistance from that person. So the longer we leave this thing, the harder and harder it is to change. And it's not a linear thing. It's an exponential thing. The longer you leave it, the harder it is to change. And this also, this body of processes becomes calcified. Think of us as we get older, unless we are yogaing and pilating and gymming and everything like this, our
which
ability,
you and I do regularly,
which we do all the time, yeah. So, then our ability to be able to, bob and weave and dive and do anything, frankly, other than just, getting out of the seat and it's painful, it's very limited. And that's exactly like a business, except a business has to be even more agile, and particularly, as you said earlier, we are now in a much faster world than we ever used to be. It's just that's the nature of the world we're in, and that is both threat and opportunity. So survive and thrive as well. If we are not agile and lean, then our ability to be able to respond to those threats and opportunities is very, very limited. And the irony is, just to finish that bit, we really do have today, in this contemporary technologies that we have available to us today, we really do have tools which can give very fast returns on investment, where you can do that on a very fast iterative basis. So you're kind of that resistance level within the company, because you're doing only small things but you're doing it lots of times, is actually reduced. So it used to be that when you made a big change in a business that's sort of calcified processes, that you were doing really enormous changes, and you can imagine the sort of, and then 5 years later, sorry Mike, 5 years later you find out that in fact you couldn't change, you failed in fact for that thing that you were doing. But nowadays we have these contemporary tools which allow us to sort of sprinkle these changes into the organization, sort of death by 1,000 cuts, if you like. So,
but this is not technology for the sake of technology, which we know, if we go back and look at productivity of organizations that have often adopted technology, they've actually become, well, as a society, we've become less productive.
Yes, yeah, that's really ironic.
About that.
Yeah.
I think we talked about that last time.
Yeah, I give the digital transformational future of finance workshops a lot, and I did 2 last week, and I ask people, I say, put up your hand if you use Line, and every hand goes up. Put up your hand if you use WhatsApp, every hand goes up. Outlook, every hand. Teams, every hand. And then I say Slack, and a lot of people put their hand up. So that's 5 different technologies that we're using simply to communicate with each other. And the responsibility of sort of moving a file from Line over to WhatsApp or over to Outlook, it's our responsibility. So we've really, ironically, with all of this technology, we've actually managed to sort of slow ourselves down in this process as well. So we've got to find that technology which has a lower technical debt, effectively. So in other words, our investments in the technology should be able to provide us considerable value back. And this has been challenging for a very long time, either these very large systems, which we've had in the past, but even, for example, robotics had quite a high technical debt, which is an automation capability. But I think now we're starting to see, particularly with generative AI, that the value back on the investments and the returns on these things, the speed you can get very real tangible benefits back, is really in a much better place than it used to be.
You've worked with many organisations on digital enablement. It's a good word, enablement, yes. Isn't it? Yeah. What are the common barriers to adopting new technology, and how do businesses overcome those barriers?
So real example, I went into a fairly large, well-known insurance company, and I knew that they were looking at technology for automation. And I said to the person, a senior person in the organization, I have to try not to say who this was. I said, what happened with that technology you were using? And I said, they said, we chose this technology. Again, I won't say the technology. I said, oh, interesting. So why did you use that? And they said, because it was free. And I thought, I'll be back in 2 years' time when you found out that doesn't work. And you really have to go. You have to leave the organization. There's no point in staying there. They have to go through. That takes a long time, because somebody's made a decision and they have to try to make that thing, bend it into shape, and it won't, of course.
2 years, an organisation could disappear in 2 years.
Well, exactly, in today's environment. Now, this was one of these sort of large insurance companies, so perhaps they have some staying power, but a lot of organizations cannot afford to take that risk. And so we actually tend to make decisions in businesses. I think, actually, not only in Thailand, but particularly in Thailand, we tend to do price, then technology, and then business. And in actual fact, it's a business problem we're trying to solve. We actually have to look at it entirely the other way around. Again, I do this workshop a lot, and when I say this, and I'm saying it to business people, they're all nodding. They all know that they have been sort of, so often what happens in digital enablement is that originally, in its first 3 iterations, was given to the IT department. The word digital is in it, so let's give it to IT. And again, when I'm giving this presentation, I give Future of Finance, I'm giving it a lot to CFOs. Every one of them is nodding, saying, yes, that's exactly what happened to us. It went to IT, it sort of got buried at number 1,054,000 in the queue. By the time it comes out of that queue, of course, it's been overanalyzed, analysis paralysis, life has moved on, business opportunities have changed. So this needs to be recognized. It's got to be a business problem, it's got to be anchored in the business, and we've got to be able to empower the business to be able to do this sort of death by 1,000 cuts. IT is a critical stakeholder, but it must not be the owner, because often it actually ends up being a block to that as well.
What I often see is in organisations is and maybe at a middle management level or something, they will see a piece of software because they've had a really good sales representative demonstrate it to them, and it says, oh, that does all sorts of wonderful things, we need that. And they go and spend $50,000, $100,000 on this software and they put it into the organisation. It doesn't work. It doesn't do what the salesman showed them that it did. Because there was no processes built out. Right. So they didn't look at the processes and say, what's the processes? Yep. Therefore, what is something that's going to make this better? We're going to take the big new shiny toy and we're going to put it in there without anything around it. Yep. Is that common?
Oh, yes. I mean, I used to work for a software vendor, and I used to know that, you know, you would go into a business conversation and then you would say, oh, the answer is this software company I used to work for. What's the question? And that is exceptionally common. I mean, even the big system integrators in Thailand, anywhere in the world, they carry a very specific tool bag in their quiver. You know, they're shooting these arrows, and it says the answer has got to be IBM. What's your question? The answer's got to be HP. What's your question? The answer is Google. What's your question? So again, it's that technology lens. The second one, we have to go into understanding what is the business problem. So you've really got to anchor yourself in the business, and there's an entire methodology related to how you uncover those things. And then technology comes much later, but you first understood the business problem. When you've understood this sort of slate of business problems you've got, you're really looking for ones as well which are high value, low complexity. That's the sweet spot. That's the ones you're looking for. And again, many businesses say, oh, I found one. Actually, it's not about one. You've got to have a slate of these because you just need to do this forever. I mean, it's a never-ending process. But you've got to try to find those high value, low complexity ones. And very often businesses will think, well, I'm experimenting, I'm trying, I'm starting, so I'll do just this sort of small one just to test ourselves. And this is just, I heard this a couple of weeks ago. Actually, one of our competitors, one of the big four in Thailand, said that they'd actually been doing this as well. And their management looked at what they did and said, well, that was very sort of uninspiring. Nothing really happened. It didn't get us very much time spent. Why are we spending this money? Why are we doing this activity? It's a killer straight away. You've sort of killed, or you've put sort of water on the fire that you want to ignite for this digital enablement. So you've got to choose carefully that process to get high value, low complexity, get return, ignites the fire a little bit more, you know, into the flames, and off you go, and start then get more people involved in that process.
Turning to probably one of my favourite topics, which is leadership. This is probably to a few of you. What role does leadership play in ensuring technology adoption within an organisation actually really drives results? Sort of expanding on where we were before, but where does leadership sit in this? And perhaps the both of you.
Sorry, go ahead. Just very quickly, because in the last week I presented to 200 people, I think, and 2 workshops as well, and this comes up all the time. So the people who are coming to the workshop, they get it. The reason that's why they're at the workshop is because maybe somebody sent them along, but typically they understand this. But I always hear, but our management don't get this. They are, and so it's very ironic in a way, because maybe the very senior person does get it, the CEO. There's usually a lot of people who have quite a lot of passion about this technology at a junior level, but because the management don't understand it, then it gets blocked. Now, the management don't say, I don't understand it. They say, oh yes, AI, that sounds great, let's do that. But they don't know how to work this, they don't know what to make of it, and so they get into this sort of analysis paralysis. It's on purpose, really, in a way, so that they don't actually ever have to make a decision. And if you think about, if you're informed about something, you can make a decision, and you can make a good decision. But if you're not informed, if you really don't know how something works, then you're kind of afraid, or you will overanalyze and keep overanalyzing, and you won't do anything, which goes back to our first argument about not making any changes at all. So management do need to get themselves better informed. They need to get better skilled with this type of technology, and that, because that's sort of acting as a bit of a plug now, where even the senior people get it, the junior people want to get into it. Actually, they're really quite excited about it, but then you've got this sort of like, it's like this, the management don't get it, but it's hard to uncover that often because they're not going to admit that they don't understand it. So Nunu had a...
Yeah, I would add to what Andrew shared. I think there's always going to be this gap because leaders in an organization tend to be known, or they get all the updates on what's going on. They attend different seminars, they speak to the big people like their 10-year workshop, and all of a sudden when they get excited, it goes down right down to the users, so the middle people will get stuck in between in a way. So the leader's role is not to know everything, but to inspire, build trust, speak to the middle management, get the buy-in, get them involved. If you don't get them involved, then they won't do it. I think we discussed this as well last time. So leader's role is not to be an expert in this area, but to make sure that they cascade them right down to the bottom and don't miss the middle management as well.
But adoption of technology, almost by definition, is change within an organisation. So who are your agents of change, and where do you drive that change, and how do you drive that change?
Agent of change is a catalyst. When I say catalyst here, is an influencer. People that have a passion can communicate and then drag the others along. Agility is important. We did talk about this as well. If you make big change in one go, there's a high chance that the change will not happen, or if it happens, it's not going to be sustainable. And it's a logic, right? Look at yourself if you want to change. If you're not used to moving around, being in different environment, you feel uncomfortable. Even at your dining table, you want your own seat. You want to have your own coffee mug in the morning. It's because you're so used to it. You're happy drinking out of that same mug every day. Same thing. Agility is so important. It's a fancy word. Speak to the catalyst. Get those people drive and make sure that they stay ignite. They are always energetic. Don't splash water at them at all.
So, but that's not always the leader.
Correct. That's why I said catalyst, influencer.
So what does the leader need to do? Get out of the way?
Inspire, communicate, involve, make sure that they understand, make sure that they drive. Repeating myself again, that leaders do not need to be an expert in any of these areas. They create opportunities for people to thrive. Open, listen. Listening is very important. The doers face challenges. What are the challenges? Are there a real challenge that they go through?
Just to illustrate that with a real example, which happened in our own organization, is that we had an opportunity for a large company to 10,000 withholding tax certificates a month, which is really going to take us an extraordinary amount of manpower to be able to do that. So one of the senior managers in the team, a fairly quiet person, just got involved in this, but had a technology passion. And they involved a more junior person who's a very quiet person. I had no idea they knew anything about technology. And they started to research this on YouTube. And they, long story short, actually through using generative AI through ChatGPT, created 2 Python programs that was able to do these 10,000 withholding tax certificates very quickly. I won't say how long in case they're listening to this. But very quickly, but that was just doing exactly as Nunu said. I mean, my role in that was just get out of the way, but let them do it, let them go and experiment, and they came back with incredible results.
Okay. So, Ratna, finding and retaining the right talent is critical. Yeah, I think it's easier said than done. What are the biggest mistakes companies make? When it comes to recruitment, what sort of mistakes do they make?
Especially around recruiting people at a leadership level. I think a number of things will come to mind. We have a company will have their own values, unique culture. Companies tend to think that hiring leaders from big name companies will answer all the questions because they're so successful, but will the person fit into this culture? Will the person come in and able to, drive the growth? I was trained for so long to always believe that past experience will give you a better future because the individual has actually gone through some sort of an experience that will dictate the success when they join a new company. Is that always true though? A company that's hiring can be going through some sort of a situation that company has never actually been. Questions during the interview, putting them through some sort of simulation, asking questions like, what sort of experience do you have when you have to deal with a tough, high-performing team? What sort of difficult decisions have you made in the past? These are the important things, not just looking at the past experience or just really high reputation organization. One of the things that we just talk about is leaders don't need to be an expert in everything. So what companies tend to look at, and I see so many times it's a mistake and it costs a lot of money, it's morale, it's everything, is over evaluating their technical skills whilst you need their leadership skills. And what does that mean? Leadership skill here mean, are you able to inspire people, build trust, making sure that they're doing their job, and moreover, have they had a track record of creating more leaders? Because you're not going to be there forever, correct? So hiring people tend to focus on things that may not be useful to your organization at all.
Yeah, I think a lot of leaders don't realise it's their job is to bring on the next generation.
Correct. So leaders are not a hero, they're team player, they're team sport, right? You need to build something for others to thrive on.
It's a tough world out
there.
It
is.
And I guess the competition for talent is as tough as it's ever been. How do organisations make sure, what strategies can they put in place to make sure they actually retain the leadership and the talent that they've got, and they're not going to be tempted away by the rest of the world?
Well, we always think about money first, right? What's the right perk? Is it compensation and benefit? Is that always the answer to that? I've seen so many examples that's not the answer. You need to know the individual's passion. When I'm highlighting individual, this is not a group interest only. Talent means it's an individual thing. What is their interest? What are they looking for? Do we need to put them through the path that they have to be at every level to prove that they can grow in a way? For leaders, they will start looking if it's not interesting anymore. They look for growth, they look for inspiration as well. So that's something I would say. It's not always, the perk is not always monetary.
Yeah, I think as you get more senior, it's probably less and less.
Correct. It's the growth opportunity, it's involvement in what they're passionate about. They're leaving a very senior level position where they are to a different senior level positions. Understand their interests, if it's aligned with the hiring company's interests, values.
Yeah, I see a lot of people
plans.
as they get on in their career become more, perhaps even more altruistic. They become more concerned about the purpose, what, sort of their legacy, what are they going to leave, and is that organisation going to be something that I can leave something behind? Perhaps when the day-to-day bills become perhaps a little less crucial. Tanwa. Emerging markets, digital innovation are creating gaps in, I guess, what has been the traditional tax frameworks. What are the biggest risks that businesses face when operating in this new unregulated world that we're in?
So I think in terms, it's always say there are two things certain in life, death and taxes. And I would add that taxes are certain, but how much you pay is uncertain. So it's a question on how governments follow up, right? As business practices change, as technology change. We have seen the world change in the last 20 years quite drastically. You've gone from having eBay to Amazon, not brick mortars anymore. You have cryptocurrencies, and the question at the time was, are these currencies, mediums of exchange, or are they assets, or are they goods, right? Because the traditional tax system, how you treat something depends on how you categorize them. And now with technology, things are blurring. Not just at the forefront of technology, because traditionally a lot of people think, well, if I'm not a tech company, I'm safe. It's the tech companies that have to deal with all this haze and fogs of in terms of how to be regulated. If I'm a traditional brick and mortar, let's say for GT, we're accountants, we've been here since the dawn of time. And it's not gonna, the Babylonians had keep bookkeeping, right? So, and how does it affect us? But if you look at the layers of technology, how businesses operate, to give some concrete example, for example, here you have an iPad, right? And the software that we are running off, right, are now not just operating on this device, right? They're all cloud. We've talked about cloud databases. We've talked about cloud computing now, right? So you don't need an extremely supercomputer in front of you to access that capability. And all organizations use that. We use that, right? Now, the question is, let's say on the other end, the service provider, they don't have to be located here. They might have their systems, their database, their mainframes located in La La Land, right? For example. And all this data that we are using is just going back and forth, right? And they might not even have a single site. They might say, well, if the traffic gets too high, the system will automatically reroute it to another country where I have another server. Now think about it. In that case, if you're gonna tax that transaction, let's say it's a service, right? In Thailand, we have VAT. Where is it being processed? Traditionally, if we think about it as brick and mortars and just goods, we try to limit our framework. Well, this glass has to go somewhere, and if it's getting shipped somewhere else, that's all the tax points. But now you can't even trace it. And if you go to that company and ask them, for our data, where does it go? They might say, well, that's a very difficult question. We know how we encapsulate the data and make it safe. But we can't go to every single data and tell you, is that process in Thailand whereby you have to charge VAT 7%? Oh, that's not here. So you're exempted. So you see the complexity, right? And every single organization has that now because we use backbone technologies. And this is not a hypothetical question. This is something that a client posed to us because they're in this field. And we went to the revenue department and we get different answers depending on the different officers that we talk to. And at the end, there's no answer, right? So if, for example, one day, as you go along and you decide, well, I'm not gonna impose VAT on this because I feel that it's an export of service. What if one day somebody looks at it and decide, well, it's not quite that, right? And you get slapped back with taxes going retrospectively. Right? The amount would be enormous and the penalties on top. So these are the limiting factors. This is what can actually, close your doors, right? You can't do business anymore because you have to pay all these penalties, you go bankrupt. Or you could realize Thailand's not the place to be doing it because the tax regime doesn't support it. But I didn't know from day one because it's so unclear and opaque.
Interesting VAT. I saw the other day that the new US regime was suggesting that VAT in the EU was actually a tariff. So Thailand had better be careful because it looks like just about every country now has tariffs because they either have a GST or a VAT. So it is a very interesting word. There you go, Andrew. We got onto the new US
got quite far,
administration.
actually.
We haven't mentioned his name.
Okay, yeah.
So I've got the Trump bingo ready to go. We haven't got there. So, given what you're saying though, how do companies balance the need to compete, and particularly with the new world where perhaps world trade is going to change, and maybe we won't have the sort of level of free trade. But how are companies going to compete in this new world while staying compliant with the necessary tax regimes?
This is a good question, and oftentimes there is no one single solution. It depends on the company. It depends on the nature of their business. And at the end of the day, the decision comes down to dollars and cents. Effectively, that's what it is. There is no way for some businesses to operate in a risk-free world, because if there are the regulations unclear, you're operating in a zone where there's no map, right? So you're driving along with no map. The question is, how much trouble can you get into, and you try to limit that.
Men always drive with no map, you know that. We don't need maps.
We don't get lost too. We just change our destination. Yeah, there you go. And so it really depends on the organization. Some organization, you have to decide the quantum of the transaction you're looking at, right? If this is going to be the main part of your business, it's critical that you get it right. You may have to make that decision whether, for example, you go for a ruling, but that takes time. You can't wait around a year to decide, well, if the government's going to reply, and you don't know how they'll reply. They might just come up with an answer where it doesn't help you at all, right? Or do you want to take the conservative approach and just top up the tax? But that makes you uncompetitive. Right? So I would say that it's a balancing act. There is no one complete solution. But at the end of the day, a lot of businesses might not even know that it's like fraud. They don't even know it's a risk, right? They're going in and saying, everybody's doing this. Just because everybody's doing it doesn't mean it's right. And I give an example, a very traditional industry that you would think the tax regulations are clear, crystal clear, because it's been around for a long time, logistics. But logistics is one area where the tax is so complicated because the parties involved have so many different roles. Transportation is not subject to VAT, but if I don't have my own cars and I have 10 cars, but for this, suddenly there's an influx of demand and I have to go to subcontracted. The question is, for the vehicles I subcontract to, I'm just an agent. I'm not really driving the car. Do I have to impose VAT? If I go to my customers and say, I have to impose VAT, will they accept it? Because they say, nobody charges VAT on transport. What's going on, right? So that's just one very little example. And that industry has been around forever, and still it's so unclear. So, if you're talking about cutting edge, it's even worse, right? So, at the end of the day, it's the business. They have to understand the tax landscape. Then you can make informed decisions, right? And,
Surely the answer is just charge a VAT on everything. Just have a broad base.
and then I'll be out of a job.
Good point. We won't do that. There's a lot of, the world is now run, it appears at times, by social media. Correctly or incorrect, correct information, incorrect information. But one of a lot of the attacks are on some of the big multinationals, or maybe not even so big multinationals, just organisations that are perceived of evading tax, and that backlash can be brutal. How do businesses avoid not just the legal minefield in different tax regimes, but also the reputational damage that can come?
Right. So I think this question is not just businesses. I think governments are very sensitive to it. You see governments coming up, riding on populist waves, saying that corporations are the evil ones. They're getting rich and they're not paying tax, and we want to tax them, right? We want to change the tax regime, and you get that pressure coming in many countries. And sometimes I would say that because of in the past there are certain vacuums in tax systems, and when you play by the rules, you often try to go by you have strategies and tactics to reap the most benefit out of it. And so that's perceived as tax evasion, right? I'm relocating myself somewhere where I pay very little tax. And now you start seeing global minimum tax being imposed, right, to level the playing field. For organizations, in terms of tax being perceived as tax evasion, a lot of times it might not be intentional by the organization itself, but when the quantum is so big, right, and the government says X company has been fined, 3 billion baht because they are not paying taxes, they're not going to go and explain the nitty-gritty parts of, well, it's a very technical issue and nobody really understands this. So in terms of reputational damage, I think the key is companies coming back to the compliance side have to start with making themselves compliant, trying to look within their organization, having that constant review, not just trusting that we've been doing this forever and it's going to be okay, it's going to be right. Have that review on your tax practices, how you're doing it, because there might be systems where people are not following it. And that's a lot of time we find that out when we do tax health checks. We go in, yes, there are systems, but the consistency of following the system is very bad and nobody really picks it up. So at the end of the day, if you wait until the issue blows up, there's not a lot you can do other than hiring PR companies to help you mitigate it. But in terms of tax practices, reviewing your practices, a lot of companies, large companies now would also review internally in terms of whether their practices are deemed very aggressive tax planning, right? In the EU now, there's restrictions against that. Even advisors like us are not allowed to advise highly aggressive tax structures, even though technically on paper they are not illegal, right? So there is that push now, and I think the management has to be aware of that, right, and keep on top of it. So it's not about trying to squeeze the most out of your profit and not paying the tax, but understanding at some times what is the appropriate amount, and that comes with constant review.
I could go on for quite a lot more with questions, but unfortunately we probably have to wind up now. So thank you for all your valuable insights, Andrew, Ashish, Ratna, Tanwa. Really good discussion. As I said, there's probably a lot more we could cover, but unfortunately the clock's beaten us. So thank you. We've covered some key areas today that can really make or break organisations. We've covered fraud, internal controls, technology, leadership, people, tax. These challenges are real, but with the right strategies, they are manageable. If you'd like to learn more, I do encourage you to download our report, which is 6 ways your businesses can fail. It's filled with actionable items that really will help you navigate the challenges and turn those challenges into opportunities.